Have you ever looked at the stock market and just felt completely lost? You see all this chaos and conflict in the headlines, but then you see the market just keep climbing and climbing. It's confusing, right? It can make you feel like the whole system is just rigged. Well, today, we're going to unpack that feeling. We're going to look at two totally different ways of seeing the market. One that, looks a lot like a scam, and another that actually reveals a hidden logic. Okay, let's just dive right in with the question that's probably on your mind. Are the markets one big scam? It's a fair question, for sure, especially when you look at what's been going on. I mean, just think about what happened earlier this year. The S&P 500, one of the big market indexes, hit a record high of over 7,100. This was the fastest rebound in its entire history, and it all happened while the world felt more uncertain than ever before. So what is really going on here? Well, it turns out there are two very different games being played at the same time. First, let's talk about the speculator's game. This is the one you see plastered all over the news every single day. It's fast, it's emotional, and honestly, it's complete chaos. To really get this game, you need to meet a character named Mr. Market. This is a brilliant metaphor from the legendary investor Benjamin Graham, who is actually Warren Buffett's mentor. He said to imagine the market as a business partner who is, well, let's just say he's a little unstable. Every day, Mr. Market knocks on your door and offers to either buy your shares or sell you his. The catch is, his prices are all over the map. As Graham put it so perfectly, his mood swings from unjustified pessimism to unsustainable optimism. One day he's totally terrified, the next day he's euphoric. There's no in-between. And what's driving these wild mood swings? It's not always logic, that's for sure. It's things like unpredictable political statements, geopolitical headlines, and these lightning-fast shifts in sentiment. I mean, just look at how quickly investors flipped from extreme fear to greed in just a few weeks. But this emotional roller coaster isn't the only reason the speculator's game is so tough to win. Sometimes the deck is already stacked against you. Yeah, inside all this chaos, there's another reason why trying to time the market is just so dangerous. It seems that for some players, it's not a game of chance at all. The BBC has even started an investigation into a series of trades that just look incredibly suspicious. They seem to be perfectly timed, happening right before major political announcements go public. It really suggests that some people might be playing with inside information. And the scale we're talking about here is just staggering. Look at this, a massive $580 million bet on oil futures. It was placed just minutes before a market-moving announcement by then-President Trump. The probability of that just being a lucky guess, it's astronomically low. It's practically zero. And this isn't some isolated incident. Check out the investment returns from some members of the U.S. Congress back in 2024. 149% return, 142%? That is 4 to 5 times what Warren Buffett, arguably the greatest investor of all time, managed to get. It really suggests that the speculator's game is one that most of us are just not equipped to win. So, if the short-term game is chaotic and maybe even rigged, what's the alternative? Do you just give up? No. The answer isn't to walk away from the table. It's to find a different table to play at. And this is where we welcome you to the investor's game. This one isn't about headlines or daily mood swings. Nope. It's about something much more solid and much more predictable over the long term. You see, this game is all about one core thing. Earnings per share, or EPS. So let's forget all the noise for a second. This is simply a measure of how profitable a company is. It's the real, tangible value that businesses are creating every single day. So while Mr. Market is off having his daily panic attacks and euphoric episodes, the companies that actually make up the market are busy making money. And over the long run, it is these profits, these earnings, that dictate where the market ultimately has to go. Okay, so let's go back to that record-breaking rally to 7,100. Why did that happen? Well, it wasn't just random optimism. It happened because the first quarter earnings reports started coming in, and they were much better than anyone expected. The actual businesses behind the stock prices were showing everyone how incredibly resilient and profitable they were. Now that is a real, fundamental reason for the market to go up. And this, right here, this is the most important takeaway of this whole explainer. You can see it clear as day. That noisy, jagged line, that's the market's daily price. That's Mr. Market's chaos, swinging up and down. But that steadier rising line, that's the growth of company earnings.
The price might wander off, sometimes for months, but it always comes back to the real value being created. That link is unbreakable.
So, what does this all mean? It means this brings us to a choice. Knowing all of this, you have to decide which game you actually want to play.
On one hand, you can be the speculator. You're focused on the short term, driven by emotion and the news cycle, constantly trying to guess the next big headline. It's a high-stress, anxious game that, as we've seen, might not even be a fair one. Or you can be the investor. You're focused on the long term, driven by business fundamentals and earnings, with the simple goal of owning a piece of profitable companies. This path, it takes patience and discipline, but it's based on real value, not volatility. So you see, the market isn't necessarily a scam, but it can absolutely be an illusion if you're looking at it through the wrong lens. The choice between reacting to that illusion or investing in the reality, that's entirely up to you. So, which game do you want to play?